Traders generally use the put-call ratio as a contrarian indicator when the values go to extreme high levels or low levels. What this implies is traders consider a high put-call ratio of, say, 1.4 a great opportunity for buying because they believe that the market sentiment is extremely bearish and will soon adjust when those having short positions switch places to cover and the market will eventually face a downturn. Remember, I said extreme. However, there is no specific number that indicates that the market has created a bottom or a top, but traders generally anticipate this by looking for jumps in the ratio for when the ratio reaches outside of the normal trading levels. The end of bear or bull markets usually sees an extreme level coupled with other indicators to give you a weight of evidence. Investors use several financial measures to gauge the market temperate before investing or trading. Put-call ratio is one such financial tool which proves useful for investors more than one way. What is a put-call ratio? The put-call ratio is a measurement that is widely used by investors to gauge the overall mood of a market. A put or put option is a right to sell an asset at a predetermined price. A call or a call option is a right to buy an asset at a predetermined price. If traders are buying more puts than calls, it signals a rise in the bearish sentiment. If they are buying more calls than puts, it suggests they see a bull market ahead. Understanding the put-call ratio. The put-call ratio is calculated by dividing the number of traded put options by the number of traded call options. A put-call ratio of 1 indicates that the number of buyers of calls is the same number of buyers for puts. However, a ratio of 1 is not an accurate starting point to measure sentiment in the market because there are normally more investors buying calls than buying puts. So an average put-call ratio of 0.7 for equities is considered a good basis for evaluating sentiment. In general, a rising put-call ratio or a ratio greater than 0.7 or exceeding 1 means that the equity traders are buying more puts and calls. It suggests the bearish sentiment is building in the market. Investors are either speculating the market will move lower or hedging their portfolios in case there is a sell-off. Falling put-call ratio or below 0.7 and approaching 0.5 is considered a bullish indicator. It means more calls are being bought versus puts. The put-call ratio can be an indicator of how the market views recent events or earnings. A ratio at either extreme suggests an overall bearish or overall bullish sentiment. The data used to calculate put-call ratios are available through various sources, but most traders use the information found on the CBOE Options Exchange website. Special consideration. The put-call ratio helps investors gauge market sentiment before the market turns. However, it's important to look at the demand for both the numerator, the puts, and the denominator, the calls. The number of call options is found in the denominator of the ratio. That means a reduction in the number of traded calls will increase the value of the ratio. This is significant because fewer calls being bought can push the ratio higher without an increased number of puts being purchased. In other words, we don't need to see a large number of puts being purchased for the ratio to rise. As bullish traders sit on the sideline, the results by default is there are more bearish traders in the market. It doesn't necessarily mean the market is bearish, but rather the bullish traders are in wait and see mode until an upcoming event occurs, like an election, a Fed meeting, or a release of economic data. 0.7, the average put call for equities that is considered a good basis for evaluating sentiment. It's helpful to watch the put call ratio to see how the market views recent events or earnings. When the ratio is at extreme levels, it might indicate an overly bearish or an overly bullish sentiment. For this reason, some investors use the put-call ratio as a contrarian indicator. A contrarian indicator. Contrarian investors use the put-call ratio to help them determine when the market participants are getting overall bullish or too bearish. An extremely high put-call ratio means the market is extremely bearish. To a contrarian, that can be a bullish signal that indicates the market is unduly bearish and is due for a turnaround. A high ratio can be a sign of a buying opportunity to a contrarian. An extremely low ratio means the market is extremely bullish. A contrarian might conclude that the market is too bullish and is due for a pullback. No single ratio can definitely indicate the market is at top or bottom. Even the levels of the put-call ratio that are considered extreme are not set in stone and vary over the years. Typically, investors compare current ratio levels to the average over some period of time to gauge if sentiment has changed recently. If the put-call ratio has fluctuated in a tight range and suddenly bumps higher, traders might see this as a sudden increase in bearish sentiment and makes their moves accordingly. Good is the put call as an indicator. One of the most trustworthy indicators of future market direction is a contrary sentiment measure known as the put call option volume ratio. On the balance, option buyers lose about 90% of the time. As often happens when the market gets too bullish, conditions become best for reversal. This indicator should be used with other indicators to give you a weight of evidence on the macro market. This indicator is most useful at extreme levels, either bullish or bearish. It is also useful at intermediate market moves. We use this indicator as one of the 100 indicators in our trading system. This is a sentiment indicator. A sentiment indicator is designed to represent how a group feels about the market or economy. These market psychology-based indicators attempt to quantify sentiment in the form of figures or graphically to predict how current beliefs and positions may affect future market behavior. Sentiment indicators look at how bullish or bearish market actors and what they are thinking and feeling, which may help forecast investors' future behavior. When the sentiment readings are usually high or low, they may begin acting in a contrarian way. For example, when investors are extremely bearish, that is often a contrary signal or a sentiment indicator that market prices could start heading higher soon. Remember, one indicator does not make a system, but the put-call ratio can be used coupled with other indicators to give you a working system, especially predicting market tops and bottoms. Study it, analyze it, adapt it. We will see you next time.